Welcome to the Behind the Curtain podcast, your real-world guide to real estate investment and property management.
So on today's show, we have a special guest. This is somebody who I would consider to be a friend, and he came into investment real estate how many months ago? Was it, Ted?
I would say, it's been a year at least, pretty recently.
Yeah. And the cool thing, hopefully for the listener about Ted, as you enjoy our conversation, is that Ted is really smart. Early on in our conversation, Ted called me, or we were connected through the realtor that was working with Ted that you've heard on this podcast. And he said, "Hey, you've got to talk to this guy." And I'm not going to give away to the listener what it is that you do for a living. But I find what your line of work just really interesting. And our initial conversation, I think, lasted at least an hour. And then there was probably a follow-up 30-minute conversation after that. And we immediately clicked, I felt. So this is Ted Huntington. And Ted, could you tell the listeners what it is you do for a living?
Yeah, I basically I have a bachelor's degree in computer engineering, and I work at the University of California, Irvine, in the library's IT department. So I do IT.
But it's so much more than that, because to me, at least, I've had a lot of friends that worked in IT, but they weren't, I don't think, managing access to the diverse range of information that you are managing. I feel like working inside of the library information system is completely different than, say, working at a courthouse or working for a corporation. Am I wrong in that?
No, that's accurate. I think, the university, I love working in the university setting. There's a lot of intellectuals, a lot of people interested in learning. And then in the libraries, there's just a ton of information, and we help people to access that information. I mean, more and more of it is now in the electronic realm. But we still do have actual physical books and journals there. But we've just seen really a massive transition from physical information, books and so on, to ebooks and electronic, information. Everything now is electronic. It's just really an amazing change.
It has been a tremendous transition, I think. I am married to I think bibliophile is the word. Is that right? Book lover? Yeah. And we have several built-in bookcases all over our house, and she is constantly acquiring, more physical books, for her to read, for the children to have access to put down and pick back up again whenever she likes. And so we're one of the rare, people out there that I think are still purchasing actual written books, from Amazon or Barnes and Nobles or whatever. Yeah.
Oh, I don't think you're alone in that. I also am kind of a book collector myself. I especially love old books that are important to the history of science in particular. To me, I think that not only are they incredibly good reads, and they only are in print. I mean, some of them I suppose are now in but some of them have been out of print for a long time. But also, I think they will be collector's items at some point, because it's a bit of history, the book, and a lot of these more famous books. And so some of them lesser known, but important, at least in my thinking.
Right. And I would agree. It's interesting to watch what it is that my wife will download on an e-reader, on a Kindle. It's almost always fiction, or that she likes a lot of mystery, so like older mysteries. And she's very interested in certain histories, but the books that she purchases, for us to own, are usually about early childhood development or teenager development, neurological development. She wants to actually hold the things in her hands that influence the way that she interacts with the world in her daily life. And so it's been very interesting to see what it is, how she makes that decision and what she wants to hold and then what she wants to download.
Yeah, I still buy books, even real estate books, because I want to have a book, if I'm like, going before I go to bed and reading or something, it's nice to have a physical book. I don't want a e-reader, I don't know. Something about it is just a little bit more familiar to me, I guess. I don't know.
Well, do you happen to have a favorite real estate book that really inspired you to get involved more in investment real estate?
I've read a lot of the more famous books like Rich Dad Poor Dad, and there's Bigger Pockets have produced a few good books, but there's also like even some older, I can't remember the names, but like just old school real estate investors, from even like 1950s and so on. I've read one of those books and I found it really fascinating. How much cheaper houses they're talking about. $20 or $20,000, $10,000 houses back then, and doing the fixer uppers back then, how to find a good fixer upper. And I really don't have any one in particular, but I try to read all of them, especially where they're people who are doing their own property management and their experiences and their hints. Like they always have helpful hints. Like some people have found like the free version of Team Viewer and so on, so that they can remotely desktop, and to their home computer and so on when they're on the go. And little tips and techniques about tax auctions. Didn't know that much about those, and dealing with auctions and other avenues. The many ways that people can get deals in real estate. There's just a ton of different techniques and strategies. My strategy, of course, is very, very tame and, and it's kind of the lazy person's technique, I guess.
Well, what is that? What is your strategy?
My strategy is mostly, I'm a buy and holder of mostly turnkey properties. I don't really do fix and flip or fix and rent. Even though there's a lot more money in it, I just kind of like to get into a property and start collecting rent. And with minor repairs, I'm willing to pay a little bit more, for a nice property, so I kind of am taking the easy way out. But for me, time is very precious to me. And so I really don't want to be, spending a lot of time with contractors and working with rehabs and things like that. Like maybe in the future I could see, I might explore that, but and I think kind of to a certain extent, it's maybe for younger people too, a little bit. Generally, people who really like to get their hands dirty in there and doing a lot of work and being hands-on in a rehab and learning a lot about how a lot of these houses and properties are constructed. In this phase of my life, I'm a little bit older, and so I'm kind of more just hoping for the turnkey, already ready to roll type of investment property.
The amazing thing is you don't sound older. Like, I'm not sure what you would qualify as older. You don't have to tell us your age, but you come across as very energetic and I don't know, just sort of optimistic about your view of real estate and your involvement and interaction with it, which is very refreshing.
Yeah, thanks. I mean, I'm 52. I won't hide it. But I think age also is just your perspective. Like if I really am a lover of life and embrace challenges. And so, thank you. I try to keep a keen mind and keep my mind active and really interested in, history and current events.
Well, can you tell us, about the experiences that you've had thus far here in Memphis, just in general? Have they been, I would assume they've been positive.
Yeah. Let me tell you the story about how I got connected with you. I wanted to start investing in Memphis. I had seen another investor in Memphis who does a lot of stuff, Anton Martel. Yeah, I'm not sure if you're familiar with him, but he has a YouTube channel and he does a lot of Memphis investment. And I thought, that really is it sounds like a good place to invest. And I did a lot of research with Zillow data and, found that Memphis prices had been appreciating in all the major zip codes there in the last 3 years. And that the rent to value property ratio was high and was a good place to invest. And also I enjoy that the weather, I think it's in the southern tier of the United States, so it's better. And so I set about trying to find, property managers. And I think I called and talked to every single property manager in Memphis and kind of sized them up on different policies. I mean, there's a lot of different issues involved with property management. And, they have to have good communication. They have to be on top of things. And I had a lot of different parameters. It's been so long, I don't really even remember all of them. But I went through and I ranked EPM, up there. I thought you guys really have a good professional, setup there. And so ultimately, I found Brett, and who I enjoy is basically my real estate agent in Memphis. I'm happy with him, and you all as property managers. And so that really worked out. And I'm very happy with you all. So that's pretty much how I got started in there. And just started acquiring properties, and that's where I'm at now.
Well, I really appreciate what you have just said about property management. I was speaking to another investor who's about to come on with us. She's out of Utah, and we were just chatting about property management and investment real estate. And I was speaking to her about a specific topic, some of the challenges that we've had during COVID, with this sort of uncertainty as to whether or not there is a requirement of a tenant to pay their rent if they're not able to pay their rent. We talked about the private contract that the landlord has with the tenant, and should the CDC be able to step in and interrupt that if the tenant is, for whatever reason, considered to be at risk for being displaced. And we just had this incredibly detailed conversation about, the federal government versus contract law versus real estate ownership. And I finally just stopped and said, listening to myself, I said, only a landlord would nerd out about this stuff, like I think about this all the time. I send myself articles all the time that I find online. And so we really love what we do, and I'm grateful that you've picked up on that.
Yeah, I think it takes a certain kind of mindset to do what you do there. And I think it takes somebody who's really good with management, in particular.
Yeah. Well, thank you. There's definitely a translation that goes on, for the homeowner. So for the listeners, I've never met Ted in person. I look forward to it one day, just coming out to Southern California and just kind of seeing what's there and meeting some investors. And Ted is definitely at the top of the list, just because like you and I have already talked about, meeting, I think at one point, and like just either having a cup of coffee or a beer or something. And just getting to see your world, which I think could be very interesting.
Yeah, absolutely. Or in Memphis. I may find myself in Memphis at some point.
Please. Yeah. I think if we can get through, fall of 21 and past the spring of 22 and sort of work our way through this new stage, of the pandemic, then I think we're going to be in a much better place next year. At least my fingers are crossed for that.
Me too.
Yeah. Can you tell me a little bit about the properties that you own right now? It sounds like you've worked with Brett before to acquire them, and I think your financing strategy is actually very interesting.
I pay all cash. I have currently 6 single family houses. They're all rented out currently in Memphis, and I try to choose. I try to choose areas that I think are good, up and coming, sort of gentrifying areas. And so mostly it's around the Egypt area, kind of where Nike and Amazon are. Yeah, it's just single family houses, and they're all currently rented. I'm sort of a newbie to investing. I have kind of a funny story. I mean, in 2005, I was working in the business office in the library for a very astute business office manager who told me, with housing prices in 2005 going up so much, you should go buy a house. And I said, well, houses are so super expensive. I don't think, I can't possibly afford one. And she said, buy a condo. And I said, well, what's a condo? I don't even know. This is how clueless I was, in 2005. I didn't even know really that a condo it's like an apartment, but you own it, and so that really kind of began my investing career. I bought a condo, and then ultimately years later, I rented that one out and bought a house, and then sold that and bought more rentals, and bought my rentals in Memphis. And so I'm still really an amateur, rookie, newbie investor. But I wish I'd gotten into real estate in my 20s. I honestly was clueless for so long that now finally I'm starting to realize what a valuable thing investing in real estate is, especially in Memphis.
Absolutely. I do want to point something out that you've said that I think they're in a different place in their investing career than you are. And I'm going to make this point. We know that the majority of our listeners, even if it's just 51%, are people who are considering getting started in real estate, and they don't yet own investment properties, and they haven't really, they're listening, they're reading some books, they're reading some blogs, maybe they're getting their financing together, but they still haven't taken that leap. And so something that you've done actually makes you quite at least an intermediate, in investment real estate. And that's that you've actually done it. I mean, what you've done does take risk, and it takes a leap of faith. And the fact that you've actually acquired 6 properties in about a year, that is incredible.
Yeah. You have to step out of your comfort zone a little bit. And I don't think anybody will ever get any gain if they're not willing to step out of their comfort zone a little bit to learn something new. I think that's really the key. You have to work, you have to break a sweat, and get a little bit of, get on the phone and start feeling it out. And that's how through talking to the various property managers around Memphis, I started to feel more comfortable about going forward. I think you all answered every one of my questions, no matter how small. So yeah, I think that's the key, like going and getting out of that comfort zone and giving it a try. And even with just one property and seeing how it goes. Yeah, I can see totally. It's really a matter of taking that, doing a little bit of work so you feel comfortable with what you're going to be doing and learning the process. There's a little bit of learning involved, there's a learning curve, but it's, I think, ultimately worth it because there are so many people who are afraid of that, even starting up that mountain, right?
Absolutely. It's kind of like what we talked about. I was talking to somebody else. This was another investor I was speaking to today, right before speaking to you. Investing in real estate is a lot like something I just did, which I know tons of people have done. It's not that big of a deal. But about 4 weeks ago, my son and I climbed Pikes Peak in Colorado Springs. And the initial part of the climb, which is the first 6 miles, from about 5,000 feet above sea level all the way up to about 9,500 feet above sea level, it was pretty easy. And then as we continued past the halfway point, it became, kind of difficult until you got to the top. And it took us 6.5, 7 hours to do the whole length of it. But we were at 14,500 feet above sea level, and the view was incredible. The headache was unbelievable, but it was so totally worth it. But that first step, like you're talking about, it might even be the most difficult one.
Exactly.
You've said just now that you've invested in California. You've had a condominium and a house. I don't know if you're in a house right now, but we know that you've got some experience there in California. How would you compare owning real estate in California versus owning real estate here in Memphis?
Well, I personally only want to own real estate in California in which I will be living and occupying because, I think that it's much personally, I am only going to be investing in other states because there are big differences between California and Tennessee and a lot of the other Midwest states. California is very sort of more tenant friendly and Tennessee is more landlord friendly, I would say. And it's just in terms of investing, but then also the ROI in California. Well, for one thing, there really isn't one. The price of real estate in California is just so unbelievably high that it just makes absolutely no sense whatsoever to buy investment properties unless you're really a multi-millionaire. The Midwest is far more of a normal market for somebody with just, a smaller amount of income looking to get into, and start investing in rentals. Yeah, I far prefer, Memphis, and I really will not. I learned a valuable lesson investing in California. I mean, I had my condo, and the rent coming in could not even cover the property tax and the mortgage payment and the insurance and so on. So I was losing, I think, a couple hundred every month. It wasn't cash flowing in any way, and it's really the exact opposite in Memphis. You can get into a property without too much, and the rent will be enough to make it cash flowing. Property taxes are not outrageous. Insurance is not too high. So it's just all around a no-brainer. I tell people, I have friends who invest in California, do rentals in California, and I just think it's really a losing battle for most people who are not billionaires, I think.
Yeah, so we've found the same here. When I first got started in investment real estate here in Memphis, this would have been, my ear was kind of to the ground around 97, 98. And then I got my license in 2000 and really started assisting investors about that time. And one of the things that I noticed about the Memphis area is that there were more people from outside of the Memphis, Tennessee area that were investing in Memphis than there were people that lived in my own community. And I began to sort of learn why that was. And I think that people from outside, specifically Southern California, I mean, we have at least 40% of all of our investors live in Southern California right now. And I think that they've realized, and for a long time had realized the same thing, which is that the value to rent, or the rent to value, I should say, is so much better in the Memphis, Tennessee area. Even back before the boom, this most recent boom that we're in right now, which kind of started around 2015, 2016, you were still able to get almost a 1-to-1 ratio of let's say that you had a mortgage on the property and it was an 80% mortgage. You were still getting, 10 to 20% above the total cost of ownership. And that would have been, your mortgage and your taxes and any interest that you're paying 10 to 20% above that. And now what's happened, of course, here in Memphis, one of the things that's driving rents up all over the country is that even though interest rates are at an all-time low, the normal owner occupant is having such a difficult time finding affordable property to purchase here in Memphis. And so they're resorting to renting because they still want to have that home ownership experience. So they're renting property instead of being able to purchase it because they're honestly fighting investors for these same properties. On the rent growth point, that I want to make sure that we get to today and have a conversation about that. Again, homewire.com had an article that was released this morning, and it talked about the rent growth capacity for the remainder of this year. And it's almost exactly like that figure that I gave before about housing value growth being 12% for the year, and how this is the first time that a number like that has been achieved since 1979, and rents are the same way. We were experiencing that, what you kind of touched on earlier, that sort of inflationary factor, that was there. We're seeing nationwide projected rent growths, which will in essence put all of our rental properties at an annual rate of about 10 to 12% overall increase from January to December, which seems small, but as a property manager, here's a neat thing. One of the things I've been doing lately is just asking for more. These properties that are coming in, the buyers will say, well, I think I can get $1,200 or $1,300 per month for this property. And I'll say, you know what? Why don't we go and ask for $1,500? Let's just go for it and see what the market will support. And I'm finding that the market, for now at least, is supporting these inflated rental amounts. Yeah,
it doesn't surprise me. Absolutely. Rents are going up. I rent currently right now here in California. My rent just went up. So, it's not strictly in Memphis. It's happening all over.
Did you say that you owned investment properties in other locations other than Memphis?
No, only Memphis currently. I am looking maybe to branch out sometime in the future, but pretty much Memphis is it for me right now.
That's awesome. Do you have a vision for next year? Like, you're a well-read person. I know that you're a constant student, just like me. You've got to have been reading articles projecting, what the real estate market is going to look like in 2022. Do you have any read on that personally?
Yes, mostly it's the most important for me in terms of how home prices are going to look here in California. I'm really waiting. Is there going to be a correction or not? And I think it will be revealed by 2022 if we're going to see any fallout really from COVID or not. And that's kind of what I'm thinking. I may get into a house for myself, and it's going to be, I'm kind of holding off because it's going to be a big house payment. And, it's going to take all my resources to buy a house at these prices. But yeah, my plan for 2022 is to buy a house for myself, most likely, depending on market conditions. If there's no real serious change, most likely I will be going ahead and buying a house. But if we see prices starting to correct, then I'll wait, and see how far they may go down if they do. But yeah, then probably I'll start resuming, maybe getting back into Memphis rentals, more Memphis rentals. That's kind of my plan for 2022.
Well, I think it's brilliant. We've had several investors this year that have done very different, more imaginative financing techniques and strategies to improve their own home, or apartment, wherever it is that they're living or that they want to live, on the back of the value growth that they've experienced with their Memphis properties.
Yeah, absolutely. Yeah, I could see doing maybe some cash out refining on some of my properties. Now, currently, I've only financed one. All the rest I own all cash. So, and they have appreciated, as you say, So, yeah, that's a great option to if you want to generate some cash for maybe another purchase. That's a great way to do that.
Yeah, I think I really have no analogy for it, but for the listener that doesn't yet own investment real estate, we've got a little bit of a story to tell you, a secret to tell you, which is that, being in the game of investment real estate, being in that world is what makes you money. You can't make money off of real estate unless you own it. You just can't. For instance, a lot of my investors that owned property, all the way back, purchasing it all the way back in 2005, 2002, in the late 90s, these people who, like Ted, purchased and held these properties during more normal economies. They experienced all the benefits of investment real estate ownership without seeing this massive value growth. And so for investors looking to realize that cash and take advantage of that value growth that purchased, say, around 2014 through 2017, so many of those investors said, you know what, this has been great. I've really enjoyed the last 6 years of owning this real estate, and I'm out. And they sold, and man, they left the experience with smiles on their faces. They were so pleased that they were able to double their money in 6 years, in 8 years. And for my investors that purchased 20 years ago, of course, they've more than tripled their money. Ted, I totally think you should do that. I think you should cash out, refi wherever you want to be. It's great interest rates. You've made, great value growth on these things. You got to do it.
Yeah. Absolutely. It's the smart move.
Yeah. And, that kind of dovetails back to what I said before. I actually said these words. I said, investing in real estate is hard. And what I meant by that is this, I've got a mutual fund, right? And you probably do too. You've got some sort of, employer funded investment, because of where you work, and, they feed that maximum, matchable amount into your 401k or your mutual fund or your simple or traditional IRA, whatever it is. And they do that every year. You never see it. They take it out of your check. That's easy, right? And I got to tell you, I've been even in the midst of this amazing economy, I've been looking at the Dow and watching these value growths, and then going over into my portfolio and looking to see how that's benefiting me. And really, there's no major year over year benefit. It's just, that's a very controlled environment. It's not as, the high highs and the low lows that are possible in real estate. I do think that, real estate is definitely an investment worthy of somebody like you and your intellect, because you're able to engage it, manipulate it, imagine the possibilities of it, reorganize it if you want to, take out the value, infuse more value. So let's try to end on a sort of a visionary note, if you will, for 2022, 2023. And let me tell you what I see, and I'd love to hear your thoughts on it. We do have a coming correction. Like there are several articles out there, Washington Post, New York Times, HomeWire, Politico, all kinds of different websites that are out there that are talking about the looming housing crisis. And so from Memphis, Tennessee, which is, there's only 1 million people here. When we consider what that housing crisis will look like, here's what we see. We don't necessarily see a correction in pricing. We do see a softening in the contract negotiation capacity of the seller. So basically, the sellers are not going to just be able to ask for whatever they want and get it. Sellers are going to have to accept negotiations that are, at or around asking or below asking price. They're going to have to give concessions and maybe even make repairs. So that's new. Right now, what we've been seeing nationwide is that sellers just get to ask for whatever they want and they get it. So the first thing is that the market's going to soften a little bit. The second thing, of course, is that as these eviction protection laws, or whatever we want to call them, expire, you're going to see foreclosures. You're going to see houses that are locked up by tenants not paying their rent, refusing to move, not being allowed in the courts to be evicted. They're finally going to be loosened up. There's going to be more liquidity in the courtroom, and we're going to see so many more properties available for purchase. That's kind of what we're seeing happening, starting in 2022, unless there's some sort of major change that, of course, we can't see coming.
That's great to hear. So do you think there's going to be like price reductions, or you think prices are just going to kind of hold and there's just going to be softening in negotiations?
So I think, real estate is stratified, if you will, right? Like, I can just imagine, a property near UC Berkeley that you could be interested in purchasing. I imagine it being like a 1930s built bungalow, or, some sort of like really awesome older construction type property. I could be wrong. I don't know what Berkeley's like.
Yeah, they have older buildings there that just go for exorbitant prices.
Right. And I'm sure they're gorgeous.
It's in the eye of the beholder. I think it's older houses. Yeah, I'm sure some of them are. Yeah, absolutely.
Yeah. So, if the same house there, that you might be looking to purchase is in sort of the upper middle income to upper income strata, here in Memphis. And so you asked if the average prices or pricing was going to drop, or if there's going to be a softening in pricing. I would say on the lower income strata, absolutely. And here's one of the reasons why. I know some of the properties you purchased in that price range, sellers are able to get more for those properties than ever before. What I believe is going to end up happening is that the actual real value of those properties is going to soften to where investors aren't going to be as willing to spend the full asking amount. They're going to go in with home inspections. There's going to be more time for the buyer to be able to get a feel for the property before they make an offer. Right now, there's just no time. Right? Like you got to jump in, you got to, put out that repair contingency, an inspection contingency. And if the house is full of holes, then you go, you know what? I'm not even going to negotiate. I'm just going to walk away, because that's the smart thing to do in this kind of market. So I think that the buyer is going to have more time. And that's probably the most important thing. And I think sellers are going to be willing to wait for the buyer to make decisions. Because right now, sellers are in a position to where if you don't purchase it and move quickly and have all cash with no inspection contingency, and you want to close in 1 week, that's the kind of buyer that sellers are looking for. And so I think there are going to be more sellers that want to say, hey, let me really kick the tires on this house and get a feel for it. I do think, just talking about strata, I think that the upper income housing in Memphis and the surrounding areas, which really start around $750, $750,000, all the way up to, $2 and $3 million properties on average. And of course, there are palaces that are, so much more expensive. I think that is really where you're going to see pricing soften, because there's just not going to be as much of a demand for that type of construction. And then the middle income housing is going to be the same as it always is, just very competitive. So depending on what type of investor you are and how much money you want to spend and all of that, you're going to, experience something different within that. Here's the good news. And I want to end on a high note. And then if there's anything else that you'd like to say, I'd love to hear it. The good news is this: history has proven that rent amounts and the amount of money that the average tenant is willing to pay for real estate, and in our case, it's single family income, is a trailing indicator of overall economic condition. Several articles that I've recently read talked about how rents are following the increase in property values, right? Because rents are speculative. They're so much more speculative than housing value. Housing value is based on the recent sales. It's based on, recent appraisals, recent refinancing, recent financing. And so, that's a pretty set figure how much that property is actually worth. Well, rents are speculative. They've got to either come up or drop based on what the buyer is willing to pay. So what's happening right now in the Memphis area, at least, is that there is no product to rent. Basically can almost ask for whatever you want. As it is a trailing indicator, even when there is a softening in the market, say 6 months to 12 months to 18 months from now, rents should remain high for the next, I'm going to speculate, 18 to 30 months if there's a correction. So for people who, like you, who own real estate, I would say, let's renew that lease. Let's increase that rent. Let's really take advantage of this great economy.
Yeah, that's the big question. Is this bull market going to continue in 2022? And, one interesting thing, if you look at the numbers, I'm really hoping that we see a lot more inventory come online onto the MLS and for sale, because I was hearing somewhere that in 2020, 1 million people, like the number of people who list every year is very kind of constant. And there was sort of a shortage of 1 million people in 2020 who chose not to list their property. And then add that to the number of people who have not been paying their mortgage, who are in forbearance, which is maybe another million or something, just for the United States. And what are they going to do when they come out of this forbearance? Are they going to sell? What's going to happen? Are they going to get a loan modification or whatever? I think there's a kind of a good chance. I'm really hoping that we're going to see more inventory. Now, can this bull market of buyers absorb that? That's a good question. I mean, there's a lot of demand. Interest rates are very low. And so it very well may be that, yes, there's an increase in inventory. A lot of more houses come online, but the demand is so bullish, that and so high that it really will not even make a dent in housing prices. That's really yet to be seen. I think we'll see that in 2022 and 2023, hopefully.
Yeah, I think we'll see it. I think when we get into the second quarter, especially, and we're able to look back on Q4 of this year and Q1 of next year, we will see a 2-quarter trend of more properties on market. I know you're probably reading this or watching this, but listeners, I just want to encourage you to look up the National Association of Realtors data that's out there. It's free for you to get. They release it every quarter. They honestly, for us realtors, they release it every month, and they'll tell you how many new units were put on the market, listed, and whether or not that's gone up and down. The same thing for new construction. That's also very informative to a buyer as to what the climate is right now, and to watch that. I actually agree with you, Ted. I think we're going to see a ton of new property on the market, and on the matter of forbearance, another statistic that I read this morning was that right now anywhere from 0.9 to 1.9% of all residences are in some form of forbearance.
It's not a small number.
Yeah, no, it's massive.
Yeah.
And so, just depending on how those people, deal with the fact that they're no longer protected from foreclosure or from some sort of, debt collection action against them, it will inform the open market very quickly. One last thing before we go, I hope that we can begin to talk about, and I want to talk to you about this as well, how to take advantage of the upcoming foreclosure acquisition opportunities that are there. They won't be amazing deals with the foreclosures, but they could be 5 to 10 to 15% below market. And there's a lot of room right there, so that's going to be fun to watch. So absolutely. Well, thank you so much for your time. I know you said this is more or less on your lunch break, which is great. I think we're right about at an hour. So I apologize if you're clocking back in late, but thank you so much for coming on. Sure. Thank you for having me, Aaron. Great to chat with you. Always a pleasure. Yeah. Here as well. And look forward to talking to you more soon. For sure. Thank you, Aaron. Have a good day.
Thank you for listening to Behind the Curtain Podcast, your real-world guide to real estate investment and property management. Be sure to subscribe at BehindTheCurtainPodcast.com. And if you'd like to learn more about Enterprise Property Management's real estate services, please visit us on the web at epmrealestate.com. This has been a Sound Ideas Group production for Enterprise Property Management, Inc.